I'm going to turn it over to the speakers to introduce themselves, but I'm sure you will be very pleased with our panel of experts, and we look forward to sharing our insights with you. So starting with Ritesh.
Hi, morning. It's a rainy day, but in my culture they say it's good things start with rain. So I'm Ritesh Ghosh. I drive the North America business for Dry Ice, which is a part of HCL Technologies, a 1.5 billion software company. Thank you.
Hi, Julie Richard. I'm currently CCO of the Wealth Management Division at Bank of New York Mellon. I've been in-house, I've been out-house, I've been compliance, I've been legal, different parts of the industry, and that's it.
Good morning, I'm Vaughn Swartz, and I'm the Chief Compliance Officer for Rabobank in North America. Been with the bank 6 years. Prior to that, several decades. I'm dating myself with 5 other institutions, both foreign and domestic. And glad to be here to talk about a very important topic, RegTech.
Okay, well, we're going to kick it right off. So first, and this is to Julie and Vaughn, starting with Julie, what are really the mission critical issues for compliance and technology leaders in financial services today?
So as we were prepping for this session, you asked me that question first, and I said, data. And Vaughn immediately jumped in and said, absolutely. And so I think this is the year of data. I think data in so many different ways, right? I think of AML reporting. I think of anything that gets screened at data. I'm thinking of data lineage. I'm thinking of regulatory reporting as new regulatory demands change and new fields need to be captured in certain systems. With everybody migrating to the cloud and looking at each one of their systems and making sure that the systems can talk to each other and extracting the right data, which has the downstream implications of, doing your regulatory filings. So as far as I'm concerned, and I've spoken to so many of my peers, and they all have these data initiatives, whether it be because some people are years behind and still migrating to the cloud now and reviewing application by application. I'm speaking on a panel next week with somebody from an insurance company that is doing exactly that and sort of making sure that before it gets migrated to the cloud, that they make sure that that system can speak to other systems and that they can extract the data. But it's a multi-year issue, and so I look at it from a CCO perspective. For me, it's the risk of getting regulatory reporting wrong. It's the risk of not. It's the risk of something as simple as marketing and advertising, your calculation of your assets under management and how you portray something like that. And then into the detail, into the weeds from an AML perspective, right? It's being able to extract that data, to analyze it, to look for suspicious activity. So to me, it's been the year or years, the last couple years have all really revolved around data. And then if you ask me a subsection of that, I would say AML is still very much front and center. So Vaughn, I know you have your own thoughts on this.
Yeah, everything you said, Julie, in addition to the fact that for a financial institution, it's time consuming to manage data, whether it's the source system, the middleware, we mentioned lineage, to the output, and making sure that output is right and has quality. So very time consuming. And then when you have stakeholders who use the data, so very downstream, including Marina, the Federal Reserve, who during the course of their examinations of firms want a 48-hour turnaround time. So they request something, you have 48 hours. Don't be late. And it's very exhausting because sometimes getting that data and presenting it in a clear and meaningful format is a challenge. Something as basic as that. Risk assessment, you mentioned risk assessment. Anecdotally, earlier this year, we did a risk assessment and the output was wrong. So self-disclosure, it's, how can management action what the bank needs if the risk assessment data coming from the source system, going through middleware and then a 4i check, still has some quality issues. So these are real-time challenges that financial institutions face. And so when we think about RegTech, one of the things we're thinking about is quality, so data management, quality of the output. How do you assure us that whatever we deploy in technology is actually going to produce the right result. And then obviously there's the economics behind it, which is, the consumption of time. How do we make it more efficient? So take out the operational risk, take out the quality issues, and make it more efficient. And that's really difficult from our experience.
Yeah, no, I'm happy you mentioned that because it's not just regulatory, it's efficiencies as well. And think about the employee and technology. If I have to go into 10 different systems to put in my information, to pre-clear a trade, to do X, Y, and Z, and I need to understand each one of these softwares, all these different applications, you multiply the time that it takes one employee by the number of times, the 10 different applications that they have to go through. And so there is also a P&L aspect to this as well.
And a risk magnification component, right? Because we are creating all this data, right? So we got what we asked for. By the way, full disclosure, I am not on the regulatory side. So first of all, my views are my own, and I do not represent the Fed or the Federal Reserve System, but also I am a compliance officer, so that means internal compliance. We do have bank supervisors at the Fed who go out and examine institutions for their compliance program. My role is internal, in-house, so in-house AML, in-house data privacy, and so on and so forth. But data management beyond the needs for it has become such a critical issue. It's an issue for data privacy, obviously, because we have retention issues, and that's an extenuated source of risk. When systems get phased out, very important that those records are cleared out. And of course, when data is transferred, you're running the risk of lack of matching, right, of fields, and that's a problem across the board. So it's a challenge, and we all hope for better technology solutions. I know there are a number of attempts to streamline the information. Sometimes it's very difficult to streamline the information because you then end up looking for different things for a specifically purposed application. And that can be problematic as well, right? So we've been trying for many, many years to consolidate our risk assessment processes, our operational risk assessment, our compliance risk assessment, our fraud risk assessment. And you're asking for different levels of data. And sometimes that's very challenging to do in one solution. So on the one hand, we do want this use, right, Julie? You want less people, so to look at less databases. On the other hand, it's a complicated issue.
It is. I never thought I'd say this, but sometimes I long for the days of Iron Mountain where each business kept their records and you knew exactly, and you would send it to a truck and somebody would shred those records for you. Now you have an application that's used by multiple different business lines for different purposes that have different record retention periods, and it's made data destruction incredibly complicated.
Yeah. And that leads us actually very nicely into our next question, Ritesh. Maybe you can share with us what are the new technologies that are helping financial institutions in this kind of ever-changing environment of regulatory requirements?
Thank you, Marina. I think Vaughn and Julie have given me a good segue into data, and they've talked about regulatory and compliance. I'd take a spin at fraud, and then come back to what we're seeing, the new technologies that we're seeing, conversational AIs. How do you go beyond that? Get better insights from data, and some behavioral AI, some new technologies that we are seeing, very exciting. Mm-hmm. But before I start, a very, very quick example and a very everyday example of a false positive. So this was right after COVID. I had a meeting in New York in the Pier area, and I was partnering up with another partner of ours, and I live in Princeton, had to take a train, bought a train ticket, put my card, went through, got off at Newark, got a part train, got a ticket, went through. Then my friend said, let's take the ferry, and his transaction failed. And by the way, he works at RegTech. So, so it's one of those examples of a fraud. It's a false positive. What do we see underlying in the data? It's a set of rules, and those rules have detected an anomaly, and that's flagged off an error. All of us have probably got a text message about buying a MacBook when the transaction is happening about 5,000 miles away. Another transaction where somebody caught something, but now what you've done is you've added a bot, and that's now sending you text messages, right? We've gone a little far. The technologies that we're seeing now has gone a little beyond that. Working on data, we're looking at technologies that can actually look at data, look at all the monitoring systems, get actionable insights, predictive analytics, real time, which is good, but we hope to do it predictive at a merchant level, that works at the merchant level. If a fraud does happen, then how do you handle the customer? So intuitive conversational AIs that can pick up that particular conversation and kind of manage that particular customer. So we are seeing some of these AIs that are put use cases. We are seeing fintechs and banks buy these. On the compliance side, again, really complex world that you have, changing regulations. You've got different, separate regulatory teams having one siloed view of the whole regulation and compliance. You've got so many moving parts, as you mentioned, cloud and data. Targets to be met 48 hours, etc. So another aspect of that same application and data that we're seeing is how do you apply this that sits on top of data and gets you not just actionable insights, but gives you end-to-end view of the whole process? Because a big challenge for you guys is you got a starting point, you got an ending point, and then you've got all these little targets which are dynamic. So how do you map a process and know what part in that process is going to fail predictively? We are seeing actually use cases of that, and some of that software we can actually show it to you. So this is on data. We talked about conversational AI. Most of us in the industry are actually pretty familiar with conversational AI. But how do you get it more intuitive? A. B, can that conversational AI not talk to enterprise AI to fix things? That's another thing that we are seeing. So you're looking at AI that sits on top of ITSM systems, monitoring systems, that can actually sense a problem before it's happening. Can it pick it up from the conversational AI? Can it pick up an alert from emails and act? And then can it give analytics proactively? And can it remediate? And on remediation, I really want to touch upon this. Now, you can start with a two-touch remediation where a human being is involved, to a one-touch, to a zero-touch. Can that AI build your confidence? Can you trust it, right? The last part is some very interesting new technologies that we are seeing. We've seen some applications in the underwriting space. It's behavioral AI. We all have the best problem solvers in our world, the best SMEs. Can you model them? By the way, can you model the fraudster, the compliance hacker? You can do that. So we are seeing instances of this where you can actually model these guys, make them scalable. And again, the idea is get predictive insights. The last thing that I'd like to add here is, listen, we did an AI startup about 5-6 years back. The biggest challenge was for you to trust us. Can you trust the AI, right? So we've come a long way. We're hitting about $100 million of revenue. So it proves that people have started trusting us. And then you merge with larger enterprise technologies like endpoint remediation, BigFix, workload automation. We are seeing that these AI technologies can now bolt onto large enterprise technologies and give you actionable insights, give you predictive, give you the works. But you got to trust us. You got to trust the technologies.
Yeah, so trust is kind of a multifaceted issue, right? There is trusting in the product. So the business owner obviously has a need, the regulator has a need for certain assurances to a level of effectiveness, right?
True.
And then the user, you have to gain the user's trust. Microsoft is putting out a lot of individual productivity tools that are popping up in people's mailboxes and saying, did you respond to so-and-so about this particular issue? Here are the top issues from last week, top emails. And users are like, bugging out a little bit because it's unexpected. You feel like somebody's watching your behavior, right? So AI is such an interesting concept, but we need to have acceptance from multiple levels, right? We need the substantive acceptance from, is it doing what it needs to do?
Correct.
Right? And then you need to kind of prepare people that this is what's going to happen so that they're not fighting the system, right?
You also have to watch out for the AI bias, though, right? Because you talked about underwriting specifically, and as you know, there have been a couple banks that have been using artificial intelligence, but it's skewed towards a certain bias, right? So when you rely on these systems, you really have to challenge any bias and really think through the downstream regulatory implications.
Yeah.
Actually, that's a brilliant example. We just got a use case from somewhere. They said, can we make it more fair? The whole underwriting process, the mortgage credit process, can you make it fair? And those are brilliant use cases, absolutely.
And then the importance of testing, right, with this new technology, right? So that's also very interesting that's evolved, right? So we've evolved from user acceptance testing, right, which kind of shows you, does the system work, to the kind of testing that you're talking about it, which is getting a group of people together to figure out what are all the potential fails, right? What are the points of weakness? Can we simulate failures, whether you're talking in the sanctions space and false positives, or the AML space, or other compliance? So that's a whole different skill set. How do you build for that? How do you build for identifying potential system failures within the context of compliance? I'm not talking about a technical failure. I'm talking about missing something, for example, in a transaction, that kind of failure, or assumptions that are testing the assumptions that are built in, testing the rules that have been built into the application to enable kind of efficiency in screening. But also then you kind of have to unravel it to understand what could go wrong, right? It's an interesting challenge.
Yeah, and to that end, I think in the compliance department, the natural evolution has been over the years to embed technology expertise within the function of compliance. So you're actually looking more at a blended advisory kind of content knowledge person from a regulatory perspective with the people who really have the technical acumen to do that testing, to do statistical analysis to figure out, is the R squared strong enough to support the deployment of that technology and those outputs that we're receiving. So we continue to evolve. I think trust is a big one, right?
Yeah.
And so I was relatively silent on the panel because my strong bias is not to trust. So I have trouble getting my head around the cloud, let alone putting all the bank's data there. So for me, just using myself as a natural example, but I think I'm fairly average, so it's probably more pervasive than just me, is trust takes time. And there's a huge educational component there. So if I have the time to be taught and learn, that trust naturally over time gets better. But we're trained risk professionals at the end of the day. So whether we're legal counsel acting as the GC, or we're a compliance official, or what have you, we're looking at everything from what's going to go wrong and not trust it. Whereas the chief operating officer in the commercial side of the financial institution looks at the ROI. They look at how does this make it more efficient, et cetera. And I think it takes both those constituents in the financial institution to come together in order to really move forward on the deployment of Reg Tech. Trust is something that, for the compliance and risk domain, naturally education helps cure some of that trust, but it's not natural. Definitely not for me. So when you start talking about AI, I freak out. I'm like, you know what?
I do too, but from a
AI,
privacy
right?
perspective.
Yes. Evolutionary programming, machine learning. I mean, RPA I got used to, right? Yeah. So the bots, I mean, basic, it's rudimentary, and those are going well. But to your point, Marina, we test, there's oversight all the time. It's that more advanced, beyond machine learning that really starts to spook us a bit.
I think what scares people is because with RPA, the underlying technology really is rules. It's static. And the rules of, your organizations have passed and cleared those rules. But today's world, I mean, if you just look at in the last 2 years, the whole, the theft, identity theft, fraud, reported fraud has just quadrupled. And why is it happening? Because the compliance hacker, the identity thief is getting smarter. They've got access to technology. They're bending the rules. Mm-hmm. So the rules are getting bent. So the rules have to now, you've got to put it into a platform which can machine learn. So I think the best way to start is aim small, miss small, start with use cases that make sense, build it along the way. But I think what technology really needs is partnership with people like you. Because once you partner, you're modeling yourself. And you got to trust yourself. And that's the platform that we offer.
Great point.
Vaughn, we'll get back to you on that one. So I'd like to move on actually on the topic of trust, you're right. So then we go on to the next step and we outsource some of these applications and technology services. And there are so many choices, right, in this very saturated field already, even though it's a new field, right? It's very hot. How do you make those choices? How do you know, so maybe starting with you, Julie, how do you know what to outsource, first of all? You know, how do you make the decision between we're going to build this, we're going to make it our own, or we're going to buy a product that we're going to implement over a period of time because it's never off the shelf, right? And what are the selection criteria that you would apply in making that decision? Build or buy?
It's a case-by-case decision, I think, but I think the more critical the application, the more likely you are to bring it in-house and do it yourself so that you don't have third-party dependency on that. But really, if there's something that's technology leading and it's off the shelf and it's something that everybody else is using, it doesn't make sense to try and recreate the wheel within your organization to become best of class in, say, an FX system when, 0.02% of your revenue relates to, FX trades. So it's really going to be on a case-by-case basis. I have our head of third-party governance is here with me today, and so I'm going to say something controversial, but it has become so difficult to get onboarded with these large financial institutions because of their expectations of the oversight, that once you are in the door, you are more likely to get a second look because it is easier to get you on our platform. You don't have to go through an onerous third-party governance process to try and onboard the vendor. And obviously, the smaller you are, the harder it is because I can tell you we have like 64 points that are required in our contracts. Very few get risk accepted. I'll be honest, we require a level of transparency into all of you that we wouldn't answer ourselves, right? And so, but it is what it is. There are regulatory expectations over these financial institutions to, do that get that commitment, have a BCP plan for exit, have a contingency plan, to sort of do ongoing due diligence. And so, it's an expectation of us which sort of gets pushed onto all of you over there. So when it comes to build or buy, I don't know, maybe you have something a little bit more refined than I can say, but for me, it's, my experience in the last 10 years at 2 different firms, it's been very much a conversation for each and every single one. So at my old firm, we ended up building our own AML process. So it was between, I know Fenergo's here today. Fenergo, I loved you, I voted for you. But they decided to build their own, right? And, with a lot of pain points and with a lot of lessons learned, but sometimes, again, with the criticality of having an AML system and having it within your control, that was, I think, one of the deciding factors. So I'll sort of stop there and see if there are more practical sort of lessons learned in terms of build or buy, Vaughn.
Yeah, Julie, I think I agree with the experience that you shared. I think the other 2 things that are key just from a thematic level are, time and resources. I won't even call it money, but case in point, there's a new regulation that's going to land in the state of California on December 9th. And it's on the consumer side with disclosures. And there's a calculation of an APR that's required, and it's on a frequency that our machines can't do, like literally can't do. And so time puts us under pressure, right? December 9th is coming very quickly. So resources, again, most financial institutions, run a budget and have finite resources, and we're running against the clock here, and we have to do something. So naturally, we're not good enough or fast enough, nor have the resources to do an internal build. We're gonna get a vendor to help us, a vendor that's helping other financial institutions who bank California get this over the line. So just case in point, that's a key factor for us. But again, like Julie shared, it's an onerous process to onboard a vendor. The requirements take a lot of time on both ends. I think naturally it starts with the relationship with the people who represent that RegTech product that we're exploring. Then we go through the internal stakeholder management, including ROI and other factors, and what we care about in the legal and compliance context. And sometimes we just don't have enough time to get that done. Longer lead time, of course, because again, if we think about the economics, RegTech is here to stay, and it's only going to make everything better. So we all need to partner up and get on the bandwagon and continue to evolve this thing. But I will tell you, time and resource is really a factor in making a decision.
Yeah, I know BehaveVox is here today, and I think a large part of their business has grown as a result of financial institutions getting in trouble and having to implement something in very short order. And so when it's that partnership, right? So we've gone to existing vendors when we've been in this situation and said, we need X, and that's where the partnership comes in, right? And they'll make a determination. Sometimes we fund it. Sometimes there's a use case for multiple different financial institutions, and they can absorb it and they will develop it because they see a use case for it beyond your particular bank. Sometimes from a budgetary perspective, it's a combination of both. So I very much see it as a partnership, and first point of call is usually with existing vendors, and then secondarily, to the extent that there's a specific need that nobody else is servicing, going to and latching onto a vendor that is doing this for multiple institutions. And for all you startups out there, it's tough, right? Because it's usually a question of scale. It's like once you get the first bank to adopt you, and you can say Rabobank and Bank of New York Mellon are our clients, then all of a sudden it opens up. So it's getting those first couple customers in order to sort of prove your case.
You can't really say that for the Fed, though. We don't allow that. We do use vendors, but they can't advertise. So that's it brings us also to an interesting question of, do we feel that technology is adapting to our needs? In other words, it must be a very challenging in terms of really planning your budget from a technology perspective as a developer. Do you build it first and see how usable it is? Or are you really adapting everything as needed for customers? I don't know if you have some starting thoughts on that, Ritesh.
Thanks, Marina. So yeah, if you look at built-out software and the buyer, there's always that bit of a tug and war, who bends around whom, right? And I think some of the things and who bends, what point does a buyer make accommodations? Does the software vendor make accommodations? I think a couple of things to consider would be the buyer. Is the requirement does it need to be heavily customized, or is it configurable? I mean, that's one of the things you could look at. If it's configurable software that you're looking for, can you get your employees trained enough, fast enough to start running it on your own? Or is the vendor, can the vendor be viable enough? By the way, that's a prevalent question with startups, right? Will you be viable enough to be around to support the software? I think that's important. I think in the end, it really comes down to what your goals are, by what time you want to get it done, and how much can the technology platform allow for your specific needs to be built onto it. It's all about use case onboarding, in my view.
Yeah, I'm going to ask Vaughn this question as well. Do you feel like you're adapting to the technology? Or do you feel like you're able to get it? Timing considerations aside, right? Because that's a special, I think, circumstance. But timing considerations aside, do you feel like you go and look for a product and you have choices that are, and you have to kind of like agree to accept all the conditions of those applications? Or do you feel like you have a lot of options in terms of something that would be built scalable for you, appropriate for you, specific enough for you?
Yeah, I mean, that's a challenging and sometimes complicated question. And again, I'm going to use a cop-out, which it depends.
Yeah. Well, maybe if you have some examples of one or another,
yeah,
that would be helpful.
Yeah, so when we have a discrete need, we will approach our vendor community, of which we have, like, at last count, over 3,000, right? But the real partners will approach them in certain cases where we have a need, and we haven't heard that the market generally has the same need, right, to the customization point. And if we can work, and we do well with several vendors in the partnership, in the back and forth, we explain the business case. It's usually a yes, no, fairly quickly, depending on the vendor, and then we can usually get going transparently and in agreement fairly quickly. Other things where it's like net new, right? So let's talk about just regulations and all the changes that are occurring, and it's net new. That's not as easy. Again, I think one of the challenges we have, and again, thematically speaking, is we need things to be fairly simple, right? We use a term in our bank, simplification. Whether you want to say efficient or less risky or what have you, we're endeavoring to make our technology architecture and our processes more simple. So in that dialogue, that is a key theme that always bears itself out. So if the product is making things more complicated, and an example is if the first preliminary discussion about the tool that could be deployed in RegTech takes longer than an hour, we're out. I mean, it's as simple as that, right? If you can't explain it within 60 minutes to normal people, right, not overly sophisticated, we're out, because all we interpret or infer is it's really complicated. Yeah. And a real interesting case last year we had was we deployed a fairly customized solution in RegTech. And this was in the KYC space for AML, right? Trying to enhance the client profile, trying to do better know your client work. And we deployed some technology to help us do this. What we didn't know was that the procedure manual that came with it looked like the United States F-18 flight manual, right? In that Tom Cruise movie that was recently there and he threw it in the garbage. It was like that thick. And that was a key learning for our organization, because as a manager of people, I thought, how am I going to give this 200-page procedure to the analysts who now have to do this work? Should have thought about that at inception when we began the dialogue. That was a learning. So usually we're looking at, can you explain it to us fairly simply and quickly, and can we develop an understanding fairly rapidly? And then what is the downstream effect to our employees? Is the procedure that accompanies this new technology 300 pages long? It's not simple. Or is it something that is more discrete, refined, 12 pages by way of example, easily adaptable to our organization? I think those are some examples of what we're really, that's the tension between do we lead or do we get led?
I like that. I like the simplicity. It cuts to the chase. So I wanted to move on to ESG. So we have an increased focus on these factors. How is that impacting the role of the compliance officer? Do you feel like it's an additional regulatory burden? Are we there yet? Is it part of your priorities? How do you fit that into your daily schedule of compliance activities?
It has made us become so much more forensic in terms of what we have to do, because every statement is scrutinized now. If I tell you that my ESG assets under management are $100 million, I, as the compliance officer, want to go and look at how you calculated it, where it came from, the definition, who touched it, who quality assured it before that number gets published at the end of the day. If not, you're not publishing it. It's as simple as that. Right, so every single word you say on ESG these days has to be now. It'll vary by regulators. Mm-hmm. So I oversee our wealth management division has about, I have 12 different regulators in my world. The primary one is we're an OCC regulated bank, so National Association, which is very different than my SEC registered investment advisor in my business. So I will pay probably closer attention based on regulatory feedback on a priority basis in terms of doing this body of forensic work, which is data lineage, which is understanding how does it get tagged as ESG, what is the definition, does it match by the time it gets quality assured? So as I am manually drawing myself these maps to assure myself that the numbers are correct, I'm starting based on regulatory risks. So with the regulators that have said the most, that are more prescriptive, that have these rules. Now, it's not saying that I'm not going to get there through my various for the other regulators, but the SEC particularly has been super vocal. So I would say that it's just another one of those things that you have to add on to your plate in addition to everything else.
And back to data.
And back to data, exactly. Understanding the definition, understanding the source of the data, and making sure that everybody who touches it along the way has a meeting of the minds so that then the final number comes out, it's accurate.
Yeah, and Julie, you mentioned tagging the data. That's a significant challenge for us as well. So it starts with data, identifying those components of our institution's data, which is ESG related. You mentioned numerous regulators. I think we're in the same boat, which is whether it's the EU, because we're a foreign bank based in the Netherlands, or whether it's stateside or anywhere else. That's a huge undertaking. I think from a compliance perspective, right now it's oversight, and Julie touched upon that. It's just ensuring that we're meeting our obligations, and those are evolving rapidly, daily, probably changed since we've been here. So, that's risk management, and it's intense because the oversight falls upon compliance right now, at least in our respective banks. So if we miss something, we're called to the principal's office, not other people. And I think more specific to Rabobank, here in North America, we're a food and ag bank. So we're vertically specialized. And so in food and agriculture, whether you talk about CH4 and methane or nitrogen in the soil or water out west and the usage or sustainable usage there, the Paris Accord, like we're front and center in that just because we bank food and ag, which has a sustainable component to it. And so we're in those discussions. And then from a compliance perspective, we make commitments, right, to our regulators and to society, and then we have to meet those commitments. So again, compliance uses data to make sure we're fulfilling those obligations and commitments. Very intense and it's very public, right? I mean, the reality is it's topic du jour. So if an institution, I'll use the term breaches, an ESG obligation, it's pretty pronounced. So it's not, something else which could be in the regulatory landscape where it's not so in the press and pronounced. And so that adds an element, I think, of stress for us, for sure.
And I think it could get a whole lot more complicated as you have contradictory definitions and contradictory requirements with each government, each state, like privacy regulation amongst the different 50 states and stuff. And so it could get a whole lot more complicated.
So are we expecting more ESG regulations
Yes.
at a furious pace?
Yes,
That's
absolutely.
coming from the audience.
Now, you asked me at the beginning what, in terms of like, what's the number one thing in compliance?
Yeah.
I think that if you'd asked me what's the number one thing I have on my agenda, it's climate.
Okay. And is that what's keeping you up at night?
Well, in general, as a human being, actually it is. In terms of compliance, what's keeping me up at night, it's just keeping up with everything. It's resourcing. Mm-hmm. It's, I feel like I've never been in this utopian state where I've been able to be proactive as opposed to reactive sitting in this compliance seat. So that worries me, coupled with CCO liability. You're one person within one organization with limited resources on a constant basis with increasing regulation. So that keeps me up at night. I appreciate that our technology partners could all help here, in due course. That will definitely help. Yeah. But we're not there yet, right? Like it's the adoption of financial technology, the adoption of artificial intelligence at scale that could really help from like a headforce reduction is just starting. Like we've seen it with certain services. We saw it first with the outsourcing of like e-communications to areas like India and Poland and other countries, right? Where you went from having a high cost person in New York sort of reviewing emails on a manual basis to being outsourced in a jurisdiction with lower head count, lower per payment count, and now you see it sort of moving to this machine learning model, right? Yeah. So will we get there so that we can eventually redeploy those to really be proactive as it comes to rule proposals, for example? I mean, I don't know. Apart from the big ones, where we've had to do them, there's a ton I just haven't had time to do. So. I'm counting on all of the people here in this room that in time will allow me to be a more proactive compliance officer as opposed to a reactive compliance officer.
Yeah, and I think that's a very serious challenge, especially with multiple regulators, right, on a financial institution and the kind of the evolving landscape of regulatory requirements and and changes that are. I think that I got to see it on a very small level because we started very small. So our first country risk matrix was manual, right? We did all the research, we did all the ratings. So we got to learn how to build something like that. And then we went to automation, right? Then we went to vendor tools. But I remember vividly, and Vaughn, you mentioned technology, like that transition, that switch of oh, what is the world of compliance about? And the profession has evolved, right? It's not really, you start with lawyers, and then you're like, oh, we need a statistician. We need investments in technology, significant investments in technology, right? Then we need a testing environment. We need to collaborate with our auditors. We need independent verification of what we're doing, and how we're doing it. So I do think that as we continue to have these expectations and trying to catch up, we're going to change how we do the work, right? And we're going to create new areas of expertise for these different roles. Whether it's testing the AI products or developing new things. I don't know, go back to data tagging, pet peeve of mine. Where are we with data tagging? I feel like it's such a challenge. And it's a challenge with legacy data, right, and legacy systems. I don't know, is technology going to continue to keep up with those needs? What do we think about that?
I think, with what Julie mentioned, especially with ESG, a lot of states are coming along. So the legal eagles really have to, interpret those laws for us. I think once you get that, as a technology platform, what we really need from you are the rules. Once we've got the rules, what your expectations are, how do you break up a process, how do you break up the milestones in the process, what are the targets within this process, how do you establish this governance, the controls, and how do you manage those controls and link it to the regulators? If we get that, I think the rest it's not that hard. Trust me, it's not that hard.
Even on a post hoc basis?
Yes,
right?
absolutely, yes.
Okay, well that's encouraging. But there's more work to be done.
But that might require extracting it from one system into sort of data warehouse-like settings so that you can tag it, yeah.
Some of the AI, the AI is as good as the people that model it, right? So the couple of things that we've got to set our expectations right with AI. It takes about 6 months, in my experience, in the kind of AI that we deliver to our customers. It takes anywhere between 3 to 6 months to put an enterprise conversational AI, so it starts becoming intuitive. Now, when you start getting towards data, interpretation of data, predictive insights, it takes about 6 months. Why? The first 3 months is just breaking down the whole process. So our guys, so with your guys, it takes about 3 months to document that whole process. But good thing is, you're not resource dependent then. You've documented the process. It's there on your dashboard, right? And then when we start looking at behavioral AI, it takes about 6 months plus, 6 to 9 months. But yeah, I think it calls for investment on both ends. It needs a call for true partnership. But yeah, 6 months to 12 months, we can get you there.
That's good to hear. So we have a few questions from the audience regarding the pandemic and kind of what are the biggest differences in the RegTech market? Do you see changes in the RegTech market pre-pandemic to where we are now?
Yes, definitely. We have, there's been an increase in fraud, right? And so we've had to adopt or in the process of adopting some AI technology to look at behaviors for when people log on to their banking online site to see how long it takes them to do keystrokes, to see, so any sort of predictive behaviors that will allow us to manually intervene and confirm the old-fashioned way that the transaction is what the client is intending to. That's accelerated during the pandemic. More cybersecurity education for our clients as it relates to fraud. And this is not, RegTech per se, but this is, the communications, right? So we've all moved to Teams and Zoom, and we've had the downstream regulatory implications of that and being able to capture. We've had so many people move to, unfortunately, you've seen the fines, JP Morgan and others, for using their cell phones to text, right? And so that has forced the banks to sort of say, if you want to support this, it's not good enough to just say no. You should probably have some sort of technology where you can capture and retain those e-communications. And so yes, on a lot of different fronts, fraud, communications. I don't know if you have a couple of examples.
Yeah, no, I think code of conduct, culture, So in thinking about that question and what you were saying, Julie, yeah, it's really changed. And so RegTech can really help us in monitoring those behavioral changes, hybrid working environment. You know, we've got sales and trading people on the market side who no longer come into the trading floor. We're, you know, they're trading wherever. And so we need to know where they are, when they log in, how they're trading. So we actually need to apply that compliance monitoring and oversight from 245 Park Avenue to, you know, Key Biscayne, Florida. And so I was thinking just now about that.
If the privacy regulations allow you to do proximity
Correct.
tracing, right?
Correct. Yes.
As you know.
Get them to sign off on it.
Yes.
VPN tracing, okay, in the United States, not so much in Europe.
Correct.
So yes,
Correct.
you got to balance that with your
Absolutely.
obligations, understand
Informed
where they are.
consent.
Interesting.
I think there's another play here. See, at the end, you know, we got buyers and sellers here, but in the end, we're all consumers. And we've been demanding very high, you know, user experience on digital media. You know, we're driving the demand, right? So, yes, I think we should also be looking at technology that can secure the endpoints. So, you know, there are lots of new technology that are coming along. I think another thing is, another problem with, you know, all sorts of technologies and products coming along, how do they play with each other? So how does the endpoint technology not talk with enterprise and secure you end to end, right? I think some of those considerations would be important to Marina.
Yeah, I agree. So we have an interesting question. What are some of the biggest mistakes you see firms make with their compliance processes?
Want me to take that one
Yeah.
first?
That's a gentleman word.
Yeah. You know, it all starts with the regulatory obligation. I mean, that's our bank's terminology, but, you know, what's the requirement? Because I see a mistake that often happens, which is you divorce and extract yourself from the basic obligation or requirement you're trying to meet. And you get enamored with technology, you get enamored with, you know, these cool processes, and you lose sight of the fact, why are we doing this in the first place? And I've seen this time and time again. I'm guilty of it too. When I get into RegTech and I start seeing all the, you know, lights and all this stuff, I get enamored with it because I see the possibility.
Yeah.
And I constantly have to remind myself and everyone working on it that, you know what, wait a minute, time out, take a step back. What are we actually doing again? There is a requirement, there is an obligation. Okay, let's keep going back to that because I see over time, especially, we get separated from that. And then that's when things go wrong because we missed the point in the first place, and then a regulator, one of 9 or one of 20 or whatever, comes in and says, I think you missed something here. Oops, we got too fancy and we got carried away. I see that as a big mistake, learning. How about you, Julie?
Gosh, I've seen, you know, internal builds go way over budget and take an extremely long time, which creates, you know, our regulatory deliverable timelines. They get compressed. People make mistakes as the timelines get compressed because they're running towards a deadline. I think sometimes one of the lessons learned is maybe having a candid conversation with your regulator and resetting expectations, right? People are too scared to go talk to their regulators about different things. And I think if you say to them in a very thoughtful fashion, this is why it's going to take us another 3 months. Here are some lessons learned. We want to get it right. And we're going to, you know, this is our #1 priority. We'll deliver it, but it's going to be 3 months late. I think you'll feel a lot of sympathy and empathy from your regulators. So I've seen banks be too scared of their regulators when that happens. And I've also seen like just internal builds, you know, go wrong, a lot of green eyes, and then, yeah, it just doesn't work out as planned.
Yet it's one of those new roles that has evolved over the last 5 to 10 years, the regulatory relationship expert at large financial institutions, right, to have that conversation on a regular basis before issues come up. So, I mean, I think that's a great example of kind of like people reassess and create new opportunities and new roles and as these risks emerge, right?
And I said it's internal, right?
Yeah.
I've experienced this internal, but sometimes it's vendor dependencies as well.
Yeah.
And so sometimes that conversation may very well have to be, you know, details about, you know, why the vendor can't deliver by a certain date and time.
Yep. And it's a very frustrating experience. It's because you sink so much time into developing something, right? And when it's not giving you the output that you want, I mean, those sunk costs are very, it's good if you can derive clear lessons learned from it versus just moving on to a different platform. But sometimes that's what you have to do, right? Cut your losses.